Ladies and gentlemen, welcome to Trading Coach's Playbook. Everybody in here, please help me welcome Mr. Cashflow himself, Trip Sawyer.
What an introduction. All right. Can everybody hear me okay? My window's over here where I can see what I'm doing. Good morning, good afternoon, good evening, depending on your locale. All right, let's get started. So, welcome to Trading Coach's Playbook. We'll start as we always do with the disclaimer. Of course, this is all about education, so nothing should ever be seen as advice or recommendation. As it is about education, any trades we talk about should always be considered as non-funded. And of course, trading does involve risks, so we want to limit that as much as we possibly can. And don't forget that Freedom Management Partners personnel are not subject to trading restrictions. Move this over a little bit. And on the calendar, of course, we've got our inner circle stuff. We've got our check-ins on Monday. Next one will be the 13th. We've got our quarterly coming up on the 24th and 25th. That has moved from the 17-18 to 24-25. We've got our mastermind group meetings on Tuesday evenings. Next one's the 14th. And then, of course, next Wednesday, we've got a Q&A with Rob for POP with Mastering the Trade. And then the next Thursday on the 23rd will be our next Trading You at 8 o'clock. Of course, we got free stuff, the cool free stuff, right? Power Hour on Mondays, this Trading Coach's Playbook on Fridays, and then what I like to call our greatest hits, Pop, E-Mini Think Tank, and Covered Call Explorer. And not to be forgotten, speaking of free stuff, is all the cool free stuff on the social media platforms. I'm gonna leave that up. So definitely go check that out. And, the Trading Post is a great way to start your morning, as I like to say. So today we are Brenda, I'm assuming you're asking if that's a holiday. Columbus Day is Monday. It is not a market holiday. It is a federal holiday. It is a bank holiday, but it is not a market holiday. So, yeah, that question has come up, so that's why I kind of assumed that might be where you were going with that. So we've been doing a little promo this week for Covered Call Explorer, and as you can see here, it's we're offering a 3-week trial instead of the normal 2-week trial for a quarterly subscription. Yes, Brenda, the markets will be open, wealth builders will be open, so all go on Monday. Our next holiday is not till Thanksgiving. I think I looked. I don't think there's any market holidays between Labor Day and Thanksgiving usually. Um. Anyway. Yeah, and Amelia just dropped a link in the chat if you want to go check it out and see what we do in Covered Call Explorer. So we kind of wanted to end the week of the promotion with a Q&A session. So if anybody has any questions that they would like to ask about Covered Call Explorer, what it is, what we do, I will answer those to the best of my ability. I'm somewhat confident that you might not be able to throw a curveball at me, but you never say never, right?
Ooh, don't give me a challenge.
Yeah, that's for the students, not for the admins. Um, but in the meantime, I do have some stuff for us to go over today. So feel free at any time to throw any questions into the chat and we will address those as we can. Now, Brenda, don't you egg her on. Uh,
Oh,
so we'll start as we usually do with a little review of the S&P and the VIX. I'm gonna pull, you know what? I'm gonna do toss instead of Omega charts because I have not done an intraday update on my um that's not what I
mega
want.
charts.
My Omega charts. Yeah, that. So let's go over here to SPX and we'll auto zoom, maximize, make big. And this is a 5-minute chart, so you can kind of see a little bit different. What we'll start with is let's look at a daily. Actually, you know what? No, I got a better idea because it's not on here. Let's go over here and go
You've
to,
got a really good question.
okay. So, do you need a large account to trade your cash flow strategies? And that answer would be no. Now, as with a lot of different strategies, um, you can do more things or different things or bigger sized things with bigger accounts. But the idea of simply trading, you don't need a lot. I suggest somewhere between $2,000 and $5,000 as a minimum to start. That will allow you to do, I would say, most of the covered calls, naked puts, Wheel of Fortune. You might not be able to do more than a contract or two with the diagonals. You should be able to do an Iron Condor, um, at least a single contract. So you can start. But obviously, it's called Covered Call Explorer for a reason. That's kind of the best place to start is with the covered calls and naked puts. So you'll definitely be able to do those. As far as a monetary limitation, and you always want to make sure that it's allowed in whatever account you're trying to do. Because if you're doing it in a retirement account, sometimes there's some extra um, um,
Rules.
yeah, my brain is spinning a little too fast right now. There are some extra requirements and rules on that you may or may not be able to do certain strategies. So you always want to check that out with check on your platform, check on if someone else is monitoring your account. Like a lot of times with a retirement account, it might not be completely self-monitored. You may be able to self-manage it, but you just want to check all that out and make sure that you can do it from those requirements. But from strictly monetary requirement, you don't need a lot of money to do this. So let's see. And we've got that's our Russell. Let's take a look at that. There we go. That's what I wanted. Was of course, here's a bigger picture, a year. Here's our tariff mess back in April, and we're going to zoom in on what was our old fib. This is our new fib that we just drew on Monday for the SPX. And as you can see, it's up a little bit down, up, taking a big step down today. So I wonder, there's a lot of different things that this could be. Obviously, as we get longer in the tooth with the government shutdown, that becomes an issue. But I found out about something this morning that I was unaware of, that evidently the Chinese are trying to flex their muscle with rare earth elements. And that could have a major, major effect on microchips, and that could be some of this. So anyway, uh, okay, Lon, the is asking what's your usual date to expiration, and that answer is the same as it is to every question on the face of the planet. It depends. But in all seriousness, what we are usually dealing with is weeklies. Now, when we do diagonals, which is where we use a longer dated option as a proxy for the stock, those are obviously going to be much longer dated out. Those are going to be 128 days or more. But for our shorts, for our calls that we're selling for covered calls, for our puts that we're selling for naked puts, for the short side of our diagonals and the short sides of our credit spreads, um, well, I take that back. Throw the credit spreads out. The Iron Condor is a little different. But for all the rest of it, we're selling weeklies. So it's front week. The update comes out on Thursday night when the video provider works. So anybody in covered call knows what I'm talking about. Had a little issue with the video last night, but it's working now. But I put out the update Thursday night, which allows you to get into possible trades on Friday, and we'll talk about why we want to do that in just a minute. And we're looking for an expiration of the next Friday. So the things we looked at in our action plan last night are all the weeklies expire on the 17th. So yeah, we're looking for our shorts. We're doing what most sellers want to do. You want to sell the least amount of time you possibly can and still get a decent premium. And that is a very objective term. But we have a very concrete set of time-tested rules for all of our strategies, and that not only includes candidate selection, but that also includes entries and option pricing and option Greeks. So, yeah. Let's see. So yeah, and here it goes down, down, down. We made an all-time high yesterday and gave about half of it back. And for those of you that follow the fibs, you know that 67.65 is our next big fib, big natural fib number. And I mean, 42 cents away. Okay, we hit it. And then now we're seeing a big collapse. This could be a big step down that can make the market even healthier for our next step up. My thinking right now, when I found out about the China thing, I think this is a bigger geopolitical event. So be careful, manage your positions, any kind of position. Make sure you're managing your positions because this could continue, but we'll see. Um, there are no guarantees, right? When somebody finds that crystal ball, you better make sure and share it with all of us, right? So, um, as far as the VIX, which is one of the things we use to look at volatility in the market in general, and of course, this is all the tariff mess. So I'm going to zoom out of that so we can get a little bit better picture. As we came out of all that, we kind of bottomed out here in the 14s a few months ago, and then rolled back up. And lo and behold, look at that big, huge candle in VIX. It's usually uh, um, anti SPX direction wise. So when the SPX goes up, the VIX goes down, and when the SPX goes down, the VIX goes up. That's not always the case, but that is mostly the case. And today it is definitely the case. So yeah, as we start to get up above 19 into the 20s, this makes it better for us sellers. So this is cool. The problem with it is the volatility caused by a huge reaction from news can make it tough to do anything, buy or sell. So you want to kind of let it even out. You want to see candles more like this and less like this huge one, because this is another sign of really, really big volatility. Volatility is good for what we're doing in Covered Call Explorer, but a whole lot of volatility. And when you get way up here into the high 20s and 30s, it's too much. That's the kind of times when you want to scalp or do nothing because, staying in the market overnight or any long distance can be dangerous when you are trading. Now, investing is a completely different animal, but when you are trading, you want to be very careful when the volatilities are very high like that. So one more thing that I do in my classes is I go over the SPX, we go over the VIX, and then we talk about earnings. And sometimes that's a big deal, and sometimes it's not such a big deal. Right now, it is about to become a big deal. So we are about to move into our next earnings cycle. For those of you that want to follow this the way I follow it, and I look at it, you hear people say earnings is starting. I look at it more as a cycle because it's always happening. It's always happening every quarter, and that may change depending on whether they can change the SEC rules or not. It may go to twice a year instead of 4 times a year, but that's off on the horizon. For now, it's quarterly. The way I monitor, a lot of people say Alcoa is the beginning of the next cycle, which is a very easy way to do it and very applicable because a lot of people do. It's AA, so it's at the beginning of the alphabet. It's easy to remember. Alcoa is announcing on October 22nd, so there you go. I prefer to start with the banks. The banks usually start between 3 and 7 days before Alcoa. So we're starting with JP Morgan, Citigroup, Goldman Sachs, Blackstone on October 14th, which is next Tuesday. Also that day is Johnson and Johnson and maybe United Healthcare. So United Healthcare used to be in there, and I think they've moved theirs out a day or two more. But basically, all of the big banks are going to be on the 14th or the 15th, and then they'll start to dwindle after that. As we start to get into that next week with Alcoa, and especially the next week after that, next 2 weeks after that, is when you see all the big tech names, the Googles, the Microsofts, the Nvidias. Wait, no, Nvidia's farther out. But you know, the big ones, and you see a lot of candidates doing earnings during about that first month, say the last couple weeks of October, first week of November for this particular cycle. But something else that I have found is that Levi Strauss is the official end of my cycle, and that was yesterday. Also, yesterday was Delta Airlines and PepsiCo. So, those are some of the companies you can look at and say, oh, well, this is the end of the previous cycle. So, let's start looking at the beginning of the next cycle. So, all these different variables that we put together when we're trading are all have their own importance and things that you need to watch. Like you don't want to be holding overnight going into earnings unless you're playing a very specific earning strategy that you have tested and you do that way. But from a lot of strategies, you want to be either out or covered with some sort of hedge when earnings come around. But there's some other things that are also important, especially when you are an options trader, and that is the Greeks. So hopefully everybody can tell me what this Greek letter is. Was it? I don't think it was in the title. It might have been in the title for today. But this is the Greek letter theta, and theta is the Greek that we follow as options traders to look at time decay.
One of my favorite Greeks.
Oh yeah. It's got to be your favorite Greek if you're going to be in Cover Call Explorer. So this is the rate of decline in the value of an option due to the passage of time. Anybody hear Charlie Brown's teacher when I said that? So
Wah, wah, wah.
what does it really mean? So for theta, an option tends to lose value as time progresses because time is a variable in the price of an option. You've got two basic pieces to an option. You've got your intrinsic value, which is quote cash value, what it's worth. Where real quick, if you have a $100 strike for a $110 stock, then you got $10 of intrinsic value. So on a call. So that intrinsic value is intrinsic to the option, and it is related to how the strike price and the actual stock price correlate. Then there's the extrinsic value or the time value, and that's what the market maker uses to blow up or deflate the option price. Part of that is always going to be, and that's the extrinsic value. Part of that is always going to be time value, which will be shown on your option chart as theta. And what it does is as you get closer and closer to expiration, we'll see a pretty picture of this in a minute. As you get closer and closer to expiration, the value of even an in the money option will decline some. And the rate of that loss in value accelerates as the option reaches maturity. So it starts kind of flat and then it just drops off at the very end. The Greek letter theta is used to measure time decay. And time is important because options are only valid for a set period of time. When you're past expiration, that option is worthless. So that's one of the reasons why this can be extremely important. So theta shows a daily amount of decline in the options price due to the lapse of time. So if you see a minus 0.05, that indicates about a nickel of decline in the price per day, per 24 hours. Always remember that all the Greeks work together, so then they are continually fluctuating, some more than others. At the money options have the highest theta, and I like to call it theta burn just because I think it sounds cooler. But theta burn happens every day, even weekends and holidays. And that's very important to us. We love holidays because that is what I call free theta burn on our covered calls and our naked puts and our wheel of fortune and our short sides of our diagonals. So here's the pretty picture I promised. So this is kind of, and it is a pretty picture. You'll notice that it does accelerate, but most options actually tend to be slightly flatter on top and slightly steeper towards the end. But this is a nice general picture of what it looks like. Well, like I said, in general. It's different for every option, it's different for every stock, but this gives you a very good idea of what to expect. So now that we know what theta means, why does it matter? Okay, well, let's take a look. For buyers, theta burn accelerates as we move closer to expiration, as we've talked about before. That means that a trader must buy enough time, and that is a intentional subjective term. Enough is exactly that, and that's why it's in quotation marks. You want to have enough time for the expected move to develop, whatever that move is. So when buying options, theta can become a risk, diminishing the value of the option as time passes. So you always want to be aware of that. So for sellers, theta burn accelerates as we move closer to expiration. I hope everybody realizes that that is the only word different in this sentence than that sentence. But it's still important because we're doing the same thing, but it's having a different effect. That means that a trader wants to sell as little time as possible and still collect good premium. Again, an intentionally objective word, but time becomes a seller's best friend as the expected move continues and we approach expiration. We like theta burn. So when selling options, theta can become an advantage, diminishing the value of the option as it passes. So when you're selling, you're getting paid up front and you want to watch all of that money disappear as it stays in your account. Disappear on the option chain as it stays in your account. So this is why we really love theta. This is why I wanted to talk about theta today because it's extremely important to those of us in Covered Call Explorer. So, speaking of such, what do we do in Covered Call Explorer? So, I'll give you a little bit of a um, synopsis of what happens. So, we've got several cash flow strategies that we use. We use covered calls, we use naked puts, we use Wheel of Fortune, which is a combination of naked puts and covered calls. We use diagonal spreads, and we do those on puts and calls. And we do iron condors. And as I mentioned earlier today, all of these have specific time-tested rules, which is very important when you're putting together a strategy, right? So, what about covered calls? With covered calls, we're doing weekly options. You always want to buy stocks in 100 share increments. We're dealing with stocks under $40 in our scans, in my scans. But one option controls 100 shares of stock. So you always want to keep those like for like. And you're basically renting out your stock with an option 1 week out in time. We're looking for about between 2% and 5% monthly rate of return, although we're usually getting even better than that. But those are, excuse me, kind of the bare minimums. And again, all with a defined recipe card, the strategy creation system, which if you've been around wealth builders for very long, you've heard Rob talk about the strategy creation system. Identify, enter, manage, exit. So another strategy we use is naked puts. With naked puts, we also do those with weekly options. We sell a put option 1 week out in time, and we're looking for between 8 and 15% monthly rate of return on those weekly positions. And again, strategy creation system, all time tested, specific rules for all of this stuff. Now, when it comes to one of my favorites, the Wheel of Fortune, we're actually combining two strategies. So we sell a naked put, collect premium, and continue to do so until something happens. We're collecting cash flow. Then if it comes down to our strike price, we could get put the stock, which is really buying it at wholesale. So we're putting out money, but we're not putting out as much money as we would have just strictly buying the stock. Number one, we set our price below the existing price. So there it goes down, on top of which we got premium for doing so. So we got a little rebate. So we got a discount and a rebate. You don't usually get those together, right? Um, so now that you have a stock, what might you do with it? You sell a covered call and collect more premium and continue to do so, bringing that cash flow in until you have the stock called away, which you're basically selling it for a profit. Oh, wow. Okay. Give me more money. And that's because you're setting your strike above. And if the price gets up to that, then you have said, I will sell it at this price. You have capped your profit, but you have capped it at a profit, not at a cost or a lesson. Um, and the best part about this, rinse and repeat. That's why they call it, that's why we call it the wheel, is you do it over and over and over again. And you can do it over and over again with different stocks, or you can do it over and over again with the same stock. I do a little bit of both. Um, So yeah, like I said, this is one of my favorites just because look at how many times you're getting paid. Yeah, how can you not like that? Um, Another strategy that we like to do, oh, I forgot my little uh, picture there, is diagonal spreads. A lot of people call these a poor man's covered call, and that is a call diagonal spread. So these are done with weekly options that you sell to open and longer dated options that you buy to open. So we're buying to open a long-term option, usually at least 120 days out. And then we're selling an option against it, a weekly option against it to gather up some premium. So we've got a cost basis for our purchase, and then we are collecting premium to cut that purchase price down. Um, and it's basically the buy to open the long is a little bit of an insurance policy. It is basically a proxy to buying stock. We're looking for 16% or more in our monthly rate of return. And where a lot of people do these with calls, we do these with calls and puts. And what's really fun, we didn't get any this week, but usually we'll get one or two put diagonals that are actually negative weeks to break even, which means you're getting paid to get into the trade. And I mean, sometimes it's nickels and dimes, but still, that's better than a stick in the eye, right? Uh, but I really like the negative weeks to break even. And of course, strategy creation system, as with everything, all rules based. And finally, we do iron condors. Now we do it says weekly or monthly. It's really uh, uh, I look at everything as weekly now. There are still monthly options that are the third Friday of the month. Um, with the indexes, those are actually American options or AM settled options, which close on Thursday and settle Friday morning instead of closing at the market end on Friday. So we always want to be aware of that. We do use them occasionally, and I will make note of that in the updates. But we're doing what an iron condor is a bull put spread along with a bear call spread, all on the same instrument. And the instrument we're using is the Russell 2000 index, the RUT. So we're looking for about 10% monthly rate of return. And again, all rules based. And the way we like to do it, although it's become difficult lately, is to ladder these things where we do about 60 days out, as close to 60 days out as we can. And then 30 days into that, we'll do another one 60 days out. So when it's working the way we really like it, we do all of the, we do two at a time. We always have two at a time. And as one expires, we get into another one. Sometimes but then again, my favorite slide for credit spreads, you do not have to stay in the credit spread the whole time. And I'm usually out when it's a nickel.
Hmm.
Um, let's see. So, Barry, the rut has American options and European options, I believe. The ones that we are trying to use more is the weeklies, which are American. I think the AM settled ones are European. Um, but you always want to make sure of how that is noted in your platform so that you are aware of, you know, how those are going to get settled. For those of you that don't know what Barry's talking about, American options can be exercised at any point, whereas European options are only exercised at expiration. So that's kind of what we do in Covered Call Explorer. And I always like to finish my classes with a little bit of fun. So here's a slide from Think and Grow Rich, which I hope everyone has read. If you have not read this book, please go do so. And there's a lot of different principles in here. Um, you got to have a burning desire. Um, you want to go through all of these, but the biggest thing that I got out of Think and Grow Rich was the idea of a mentor and a mastermind. And that's the best way to learn is to have mentors and to be in mastermind groups. I am in I'm in Inner Circle and I help teach mastermind group, but also actually I just finished a mastermind outside of Wealth Builders and I'm usually in one other mastermind, whether it is about it's not usually about trading. It might be about personal development. It might be about speaking and storytelling. It might be about how to train dogs. There's a lot of different things out there, but they're great ways. I love the metaphor that Rob uses, where when you're talking about a mastermind, you want to remember that 1 and 1 is not 2. 1 and 1 is 11. And that's really the idea that the um, the sum of the parts is bigger than the whole. So you've got a group, but not only do you have everything each individual in that group has, you have also the group as a whole. So it kind of compounds. So I'm a big believer in that stuff. And then here's one I put in my update last night, which I see every once in a while, and I want to throw in there because it's important to what we're talking about. Is making money trading. So remember, there's 252 trading days each year, and this is what you can kind of look for. If you're making 20 bucks a day, it's kind of a hobby. As you start to get more into the side hustle and even career, and averaging, you're not always going to make $1,000 a day, but maybe average that out for the week or for the month. That's $252,000 a year. That's a nice chunk of change. So I like the Empire one. That's that's what I'm shooting for. But yeah, this shows how powerful trading can be and that it can start small and grow very big. So that's about it for covered calls and covered call explorer and theta. So if anybody's got any more questions, feel free to throw those out. And in the meantime, we will do what we like to do in these classes. Let's go to the charts. And yeah, my charts don't look that bad, but they're close sometimes.
Looks like Rob's.
Yeah, there's your last shot at the disclaimer. We'll end that, and I'm going to pull that out and pull this over. And there we go. All right. And of course, here, this is the SPX. I'm going to zoom in real quick and see that orange line is the 6765 next natural big fib number, not even a midpoint, but an actual fib number. So that becomes very important. As you see, we've been hanging out up here. And of course, we hit it and dropped off, but I think at least some of that was news. But it is a natural support and resistance. Let's see. So we've got let's go over to this one and we will go look at what I'm going to look at is wealth. But for those of you that have Omega charts and have the Pro Scanner, there's a whole bunch of scans in here that come with Pro Scanner. And one of them is covered calls and another one is naked puts. So this is a nice place to start to go look for candidates to do some of the things that we were just talking about. Now, of course, we've got AA and we know already right there, big E right in the middle of the chart. This blue line for me is 21 days out, and that is 21 days from today. So anything on this side is a no-go for anything more than a day trade. And anything on this side is cool with a swing trade or any of the things that we do in Cover Call Explorer. So let's see, we got Archer Aviation. Here, let's make this a little bigger picture so we can see. That's a nice little channel right there. It's a little bit far away from the moving averages. And this is what we like to see, though. So let's zoom back in. This is what we like to see in Cover Call Explorer. With the 55 below the 21, below the 8, below the price. I hope, who knows what that is? Who knows what that signifies when you have all of your moving averages in the right order and you're above, obviously you're above all the moving averages, so that is a bullish bias. And when you've got all of your moving averages in the right order, you've got true bullish bias. So we really, really like true bullish bias when we're doing covered calls and naked puts. The one thing though is you want to be able, we're usually using the 8 moving average as an entry indicator. And this one is, let's see, so we're at 11. This is yesterday's candle though. I have not updated. This would be what I would be doing last night as I'm going through my action, building my action plan for Cover Call Explorer. We've got a moving average of 1177. Our current price is 1266. So that's what, about 89 cents difference. Our 13-day moving average is 85, or not moving average, average true range, Wilder's average true range is 85 cents. I don't like to look at candidates that are more than 1 ATR away from the moving average. That's part of my risk profile for doing covered calls and naked puts. You can. The problem is if it's moving, if it's actually moving bullish, like this one looks to be doing right now, it might continue, might never come back to your entry, might never come back and tap that 8 to allow you to get in. So do you really want to watch a stock that you know you're not ever going to find an entry for? Probably not. Let's see, adaptive biotech. Let's make this bigger again so we can see what we're doing. That's a nice little uptrend. Again, that's a good distance away. We're looking at 90 cents away, and our average true range is 75 cents. Okay, next. I'm going to start going through these a little bit faster. I'm trying to do a little bit of teaching, but also we want to look at some candidates. So This one we're not really happy with because it's not bullish, right? Um, AI comes up a good bit. Now, this is another one of the things we want to look for is an uptrend because you don't want to buy a stock that is in a downtrend. And it's very slight, but that's a downtrend. So, as Rob mentioned in one of his YouTube shorts that I just happened to see this morning, the most effective word in trading. Next. All right. Um, let's see. Amcor. I don't know a lot about that. That looks pretty decent. Actually, you know what? Let's go back over to this tab. So we're looking at our CCE stuff. That's not too bad. That's actually pretty good. And that did not come up on my scan last night, I don't think. I don't like this huge candle right here, but the pattern is okay. We're looking at $1.21 of ATR, and that is about 60, what is that? 70 cents, 71 cents. So that's okay. That's a maybe. We got earnings just around the corner. That's a maybe. We'll check it, but that's not great. Amp X. That's another maybe. Arc G was really, really good and it got away from us. Look how high that is. I like the stock, but the position it's in right now is not great. Plus, our MACD is kind of showing more strength that it might keep going. So we might not ever get an entry. Let's see. Arctus Biotherapeutics. That's a mouthful. Let's
Mm,
see. I just eh, eh.
mm.
The other thing is I'm tempted if it didn't take so long, I'd do a quick update because I'm betting a lot of these are down here right now.
It may give us some nice entries for Monday.
Well, they be below the 8, so we got to wait for them to get back above the 8 again. That's the
Yep,
problem.
yep.
Plus nothing's closed. That's why I do my update after the market close on Thursday. It's really hard to do. Now, I hope everybody sees why this is not great. It not only is it dead, it fell to get there. So no thank you. Black Sky is a decent one, but it's gotten away from us a little too high. Let's see.
Next.
Yeah, next, 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 next. That's not bad. DNA. Ginkgo Bioworks Holdings. Wow, I never heard of that one before. So I like the position of that. It's true bullish. It's coming back. We're real close to an entry right there. We've only got, what, 34 cents to get down to it. We've got a true range of $1.24, so we could get back to that. F is for Friday. This is something I got from Ryan Litchfield many, many years ago. I want to know where the Fridays are because those are expiration days. Unless you're doing SPYs, Qs, or IWM, where you have expiration days every day, and there's several stocks out there, or sorry, there's several sector ETFs out there that have Monday, Wednesday, Friday. I think some of the commodities are starting to add Monday, Wednesday, Friday as well. Unfortunately, diamonds still is Friday only, but that's okay. But this, I like this one. I'm gonna mark this one. It's in a good position. Let's see. No, it's on the upswing, but something about it I just don't like. Dragonfly, that one got away from
Next.
us. Dine, it's kind of flat. Um,
No momentum.
I don't like this over here. that adds to the fact that it's kind of flat. Yeah, and even though it started to channel, it died at the beginning of September. So yeah, there's not a lot of momentum there. That's really nice. Unfortunately, it fell down below the 8. So we want that to get back above the 8 before we really look at it. Enovix comes up a good bit, and that one again, it got away from us. That is only 57 cents away for a 69-cent Wilder's average true range, but look how long it's been away. So we definitely need a nice pullback to the 8 before we ever consider getting into it. Nope.
You've got a question.
That's not bad. Yes, we have many, 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 many trainings everywhere. Let's do that real quick. Let's go to Covered Call Explorer. This is the members web page. So you'll have your weekly videos, and we keep 4 in case you want to go back and review anything. We have our action plans, and we keep 4. And then we have our foundational trainings, where we have trainings and manuals for covered calls, naked puts, wheel of fortune, call diagonals, put diagonals, and iron condors. And then, as we had this past Wednesday night, we have a quarterly Q&A where you can come to class and ask any question. Now, you can always send a question to support. They will forward it to me, and I will do my best to answer it and get it back to you as soon as possible.
They can send a message right from that page.
Yeah, there's your send a message right there. That goes to support, and they will forward it to me, and then I will answer it back to them, and they'll forward it back to you. But the good thing about Q&A is it's a live class. So everybody gets the perk of not only hearing the question but hearing the answer as well. And again, we rarely have enough questions to fill up the whole hour, so we're going to do some teaching as well. And Wednesday we talked about habits and routines. So it's not always about a trading strategy or a setup. Sometimes it's about how to be a better trader. Let's see. So yes, to answer your question, we've got trainings for noobs. That's what we want to do is teach, right? And the best thing about all of the classes at Wealth Builders, but especially mine, of course, is that while we're teaching, we're giving you fish so that you can use those to practice. Get on your platform, bang on that enter button, learn your platform, use the action plan every week to do non-funded trading as much as you can and learn not only how the strategy works, but you're actually doing it. So that makes you even more effective as a trader. And then as you feel more comfortable, you can get into funded trading using these strategies. But it's all about learning. Let's see. Um, I want to call that Egypt, but there's no G there. I Point Pharmaceuticals. I like that. I like that a lot. I'm upset that that is not on my scan. That did not pop up on my scan because my scan is a little different than this one. I'm gonna have to start coming over here and looking at these. Although I had plenty of cover calls and naked puts this week, I just didn't have as many diagonals. But I like this because we've got an uptrend. We're in a little bit of a lull, so that's a nice place to enter. And when I get into a position where I'm seeing a lot of what I like, sometimes I'll go down here and look at these 2 indicators. Stochastics are really good for channeling stocks. MACD is a little bit better for trending stocks. And you'll notice we are in winter. So when you're looking at MACD, we're going to start here. You're at the top. And this is summer. And as you go through the midline, you fall into fall. When you hit the bottom, you go up into winter. And as you come through that midpoint again, you spring into spring. So that's the way I remember the seasons of MACD. So you've got winter, spring, summer, fall. And we like to see MACD moving from winter into spring, which is where this is headed. So it's just a me too. It's not really a candidate finder, but it's one of those me too indicators of I like this and now I like it even more. So let's see. Fluence energy. Mm, that's okay. I don't like that it's been away from the moving averages for way too long, and I don't like that the MACD lines are way, way high. So, ooh, I like this one. Let's see. Got 61. Oh, wow. So it's 1 penny below the moving average. So technically that would be a close above, but sometimes you will see, and this one's been below a few times, so I'm probably going to want to wait for it to close above the 8 again. But sometimes you'll see these staying above the 8 and they'll just barely dip down a few pennies. I call that one a small move up, which is one of our entry points. But I will clarify it in my video of not only do we need a move up, we need it to get above the 8 and keep going as a move up for our entry. So we're not going to enter it right out of the gate. We're going to enter it after it gets above the 8 and keeps on going. But that is a cousin to the bounce off the 8 entry that you will see in a lot of different strategies inside wealth builders. Let's see. Who knows what's wrong with this? This could be a buyout. It'd been really cool to get it here, but when it starts to go flat, the options die. So you can't get any premium. Now I don't know that. We'd have to go look at the option chain to make sure, but that's probably what's happening right there. Let's go down to, let's take a look at Intel. Intel's a nice one. Um, let's see. Who knows what's wrong with Intel? I love class participation, so I will bang and bang on you to participate in class, especially live classes. Kind of hard to do in video classes, right?
Mm.
Look at this. Earnings inside the blue line. Warning, warning. Let's see. So Barry is asking if it bounces up off the 8 since we sold the option, won't we lose money closing it? If you're talking about a covered call, um, no. That's that's you're what you're doing here. You're not looking to, it's a little bit different than buying strategies where you buy low and sell high. What we're trying to do is sell high and buy back low. You can let it expire worthless, but I'm usually going to buy back when it's almost worthless. And that is defined by you guys have heard me, guys and gals have heard me pound this drum a lot. You want to find yourself as a trader. What is your trading style and what is your risk profile? And those will define a lot of how you do things. For this particular strategy, for a covered call, what we're looking to do is not buy it and then sell it. We're looking to sell it and then hold on to it. So if it continues to go up, then yeah, if you sell it, it's going to go against you, but you will hold on to it. If the price is going up for a covered call, you will hold on to it. And if it gets to your strike price, you will get called out, but you get to keep the premium and you sell the stock at a profit. So you're double dipping on your profit. Does that make sense, Barry? So it's a little bit different way of looking at it from the covered call side. So yeah, there you go. The only time that you would buy it back is that if it starts to dip and that option loses value. So say you sold a covered call for a quarter per contract, 25 cents per contract, and you did that on Friday And then you got all that free theta burn on Saturday and Sunday. And if it was Labor Day, you got it on Monday too. And then you open up your account Tuesday and you look at it Tuesday afternoon and the option's worth a nickel. I'm buying that thing back every time. Number one, it allows me to recapture that capital and use it again. And number two, it takes a 100% of my risk off the table. So yeah, and I'm willing to spend a nickel to keep 20 cents. It goes back to an old analogy that Ryan Litchfield used to use with the football field. And he would show your dollar running up the football field as your position went in your favor. Well, when you get down to the red zone, down to the 80-yard line, how much is it worth you to get that last bit, knowing that you're risking everything you've already gotten? So, what's the average number of trading ideas I give each week? And of course, that answer is it depends, right? But more seriously, yes, I like to goof around a lot. Let's take a look. How about that? Real quick. We're almost done. So let's do this. Let me do, let me go back a little bit. Here's an action plan from August 29th of this year. And here is 17 covered calls, 14 naked puts. Now, these are the same. This is the same scan. So these will be the same candidates, but sometimes one side or the other will get kicked out because either it doesn't have enough rate of return or it just doesn't work for whatever reason. And then everything that is green or yellow in covered call and green or yellow in naked put goes on the Wheel of Fortune plan. So we've got, what is that, 12? Yeah, 12 Wheel of Fortune candidates. So that was a pretty good week. We had plenty. Now, a lot of times, depending on what the market is doing, but when the market is going up and up and up and up, as it has for the last few months, we get a lot of call diagonals, but not a lot of put diagonals. But when it rolls over like it did today, if that continues, that can switch. But on that week, we got 21 diagonal calls, and you can see we got all kinds of different price points. Rates of return, we're tracking our weeks to break even on our diagonals, our initial risk first week, if it gets exercised first week, and we have a little score over here. And this is total score, which is these three columns together, and score no price, which is these two columns together. So you can kind of figure out, how you can use that as another comparison tool to whether or not you want to get into something. Here's all of our entry rules. We've got small move up, pull back to the 8, a wick back to the 8, which means it doesn't have to come down there and stop. It can just touch it and bounce and keep going. That's more of an intraday entry. And then we've got one more, which is close above the 8, which you rarely see just because we got better candidates out there. Yeah, Brenda. Yeah, it's going to be a big one. Brenda was just noting how big the SPX has dropped today. And then we've got 8 puts. So that's actually a pretty big week. We've also got our iron condors, and this is something we've run into over the last few months, having a really hard time getting call spreads because as the market just keeps going up and up and up, the market maker doesn't want to write call spreads for our criteria, which is $10 increments between the strikes and nothing above a 10 delta. And when you go that far out, it becomes $50 increments between the strikes instead of 10, and that's too much risk. So I will give you some bull put spreads when that happens. A lot of times this 36-day one will give us an iron condor, but the other ones will not. Also note right here, I will tell you when it's an AM settled contract on the Russell. So lots of good information there. But I would say this is a big plan. So I'd say we're averaging probably somewhere between, how about let's use some good fib numbers. We're doing between 8 and 13 covered calls and naked puts, we're probably doing somewhere in the range of 13 call diagonals, between 5 and 8 put diagonals. We only had 3 this week. And I try and give uh, 2 or 3 opportunities on the Russell simply because it's become so hard to get anything, especially longer out. But with the rollover today, we're probably going to see more strike prices fall into our criteria really, really fast. Oh, and there it is, 1 p.m. So that will be the indicator that we need to start rolling out. I want to take a little quick look at Jumia. This was one that was on the action plan last night. And as you can see, nice trend, true bullish. It's, what is that? 65 cents out, which is pretty close to the Wilder's average 2 range. But it's been on the, and that's another thing you'll see is a lot of times when candidates start to reappear on the scan week after week after week, sometimes I'll leave them on there simply because there might be people out there that own the stock and they want an idea of where to start looking for their short. So yeah, I do that on the iron condors. I mean, excuse me, I do that on the cover calls as well as the diagonals. So yeah, let's see. There's the check marks. Yeah, ouster, qubits. I love qubits. That's a good one. So hopefully everybody got some really great, awesome, super fun information today. And I would love to see all of you join us in Cover Call Explorer. And have a good weekend. And as I like to say, trade disciplined out there.